Hey everyone, and welcome back to today's Daily Market Brief. I am absolutely thrilled to have you here today because we are doing a deep dive explainer into yesterday's, frankly, dramatic market events. If you were watching the tickers, you know exactly what I'm talking about. The market delivered an absolute shockwave, and today we're going to dissect the data, unpack the charts, and figure out exactly what happened behind the scenes. We aren't just reading the news here, we're looking at the structural data to map out our next logical move. Okay, let's dive right into this. Here is our roadmap for today. First, we'll cover the IBM crash, then evaluate the fundamentals to see if this is just a transient speed bump. After that, we'll unpack the liquidity trap, check out AVGO for sector confirmation, and finally, pinpoint those key support zones. Section 1. The IBM crash. A violent repricing. Now, I want to take a second to calmly emphasize the sheer scale of the sudden market movement we just witnessed. Minus 25%. Let that sink in. That is a massive drop that hit yesterday immediately following the release of IBM's Q2 2026 earnings. We are talking about a quarter of the company's entire market capitalization completely wiped out in a single session. It was a violent repricing, and it caught countless retail investors and, honestly, institutional players too, completely off guard. When a massive blue-chip behemoth like IBM drops that aggressively, it demands our immediate, focused attention. We really need to know, is this a systemic failure, or is it actually an incredible buying opportunity hiding in plain sight? Moving on to Section 2. Fundamentals. Just a transient speed bump? We have to ask ourselves, is this a permanent loss of clients, or just a transient speed bump in the broader timeline? We really have to separate the emotional market reaction from the underlying business reality here. Now, yes, the Q2 2026 numbers for both software and infrastructure clearly came in below analyst expectations. But here is the absolutely critical data point. If you compare software revenue from the second quarter to the first quarter of 2026, it still grew by 11%. So the reality is that it's growing, it's just decelerating relative to some incredibly sky-high expectations. So why is that deceleration happening in the first place? Well, it comes down to enterprise budget shifts. Think about it. IBM's clients are massive corporations and governments. There is no executive at that level who is going to take the massive operational risk of replacing critical IBM services with some internally generated, untested software. It's just not going to happen. Instead, what we're seeing is that they are temporarily reallocating their budgets to two very critical areas: AI infrastructure capital expenditures and cybersecurity. They're basically taking a pause, right? Delaying the signing of new software contracts to figure out their overall AI spending. The demand hasn't vanished at all. It's just been pushed down the calendar. Fundamentally, this looks incredibly temporary. Section 3. The liquidity trap and market mechanics. So, what do the charts actually say? I mean, if the fundamentals are just experiencing a temporary delay, why on earth was this sell-off so catastrophically violent? Is the chart reflecting just a simple earnings miss, or is there a deeper mechanical story written into the price action? Let's take a look at the footprint left behind by this smart money. To get what's happening here, we need to define a really critical technical concept, the liquidity sweep. This happens when market makers intentionally push asset prices just above significant old highs. And you might wonder, why do they do that? Because it triggers an absolute flood of retail buying from people trying to catch a breakout. The market makers literally need this buying pressure so they have a market to sell off their own massive positions into. They basically trap the retail buyers at the very top, absorb all their liquidity, and then initiate a sharp, aggressive reversal downward. Let's actually walk through the exact timeline of how this IBM trap was executed. Starting the week of June 1st, 2026, the price was pushed up just enough to break the old highs from November 2025. Step 2, this induced massive retail FOMO, fear of missing out. Everyone saw it and thought it was a clear breakout. Then, step 3, knowing the software revenue was decelerating, the smart money used that induced retail buying frenzy to sell off heavily right before earnings. And finally, step 4, the massive shakeout we saw yesterday. This brilliantly illustrates a classic textbook bull trap. The market was entirely unbalanced, everyone was leaning one way, and boom, the floor was pulled right out from under them. Now, let's look at a quick educational case study to see just how deceptive this exact setup is. A very prominent financial analyst, Jim Cramer, actually recommended buying IBM on television on July 13th. And look, we bring this up not to mock or point fingers, but strictly as an objective, cautionary lesson. Even highly experienced professionals can easily fall for a well-executed false breakout. It's just a fundamental error in speculation driven by sentiment rather than structural data. because when they sweep that liquidity, the chart looks incredibly bullish, right up until the second it collapses. Section 4. Sector Confirmation. AVGO Analysis. But how do we know this isn't just an isolated problem specific to IBM? Well, when we look at IBM side by side with Broadcom, ticker AVGO, we see practically identical market behavior. Both of these massive tech stocks experienced a false breakout, and incredibly, both of them peaked precisely during the exact same week of June 1, 2026. Tracing AVGO's timeline honestly makes this undeniable. AVGO had old highs established around May 11th and 12th of 2026. On June 1st, it broke those highs, executing the exact same liquidity sweep we just analyzed on IBM. It totally trapped the breakout buyers and then suffered a subsequent crash. So this completely confirms our fundamental thesis. This is a sector-wide budget shift causing a temporary revenue deceleration paired with identical institutional manipulation across the entire sector. Finally, Section 5. Key support zones and actionable price levels. Okay, now that we understand the why and the how, let's talk about the what next. The absolutely crucial point is this: that brutal 25% drop, it is actually a healthy market mechanism. It's a market cleansing. When smart money shakes out a market, prices typically retrace all the way back down to the origin of the last upward move. The whole goal is to completely expel all those early buyers, clear out the leverage, and leave the asset structurally clean before the next true upward phase can even begin. So for IBM, based on the chart history, that origin point sits precisely at 195. This target support level aligns perfectly with the structural lows established way back in October 2024. This is the zone where the leverage is flushed out, and where we fundamentally believe a magnificent buying opportunity presents itself, because, like we discussed, clients will inevitably resume signing those delayed software contracts in the coming quarter. And if we apply that exact same logic over to AVGO, we find its corresponding support level sitting at 281. And this number is absolutely no accident either. It perfectly matches AVGO's historical structural lows from both August 2025 and March 2026. These are the deep value zones that are created by the liquidity sweep. So we've seen the fundamentals, we've completely dissected the institutional traps, and we have our key structural levels laid out. The market is basically clearing the deck. So I want to leave you with this question. Are you ready to capitalize on market shakeouts? By understanding these mechanics, you no longer have to be the trapped liquidity. You can patiently wait at those structural lows and actually use this data to your advantage. Thank you so much for joining me on this explainer today. Keep a close eye on those support zones, and I will see you next time.